Hello, everybody. This is CyberBulls, my favorite episode of the week. I get to talk to my friends. We get to chat about Tesla. We get to talk about investing. The two major topics this week is we're expecting Tesla to have their earnings call on the 19th, 2 weeks from now. We're going to hear from these guys what they think about the margins. We're going to learn about Supply Chain 101, about inventory from Jeff Lutz. Somebody has to finally teach us what's going on. There's so much confusion out there. And we're going to learn more what's happening in the economy. Come on in. Welcome, everybody, and meet my friends.
Tesla is the most consequential company in the world.
I'm just a bull on the EV business. I think the margins are going to explode.
Still the same company. Company is still executing.
The energy is bigger than the auto business.
I'm the young bull that talks a lot of smack.
All right. Here we are. So, of course, this weekend we started and learned about the production delivery numbers from Tesla. Many of us were way off. But we were very happy, I think, with the production numbers, but the delivery was off, except for you, Christian. I cut out a clip of what you said last Tuesday, and you were the only one that was right on. So did you want to say anything before we get going? Like I told you so or anything like that?
No, it was luck, but I was just, the only thing I got right, I thought, it's a tough macro. So I'm just thinking everyone just got super bullish, 440, 430. And I'm just like, this is just a tough environment. And so I just took low. I went 5% above the previous, roughly rounded it and came up with 422. So it was just lucky, but a little bit of work in my head with it. But yeah.
Sure. Let me go ahead and play that clip just so you can say, I told you so. I'll do it's a 10-second clip, guys.
I'm not as detailed as probably you guys. I'm just looking around about 5% more. So general rule of thumb. So I'm looking around 422,000. I'm just kind of being conservative. And I think if they get anywhere over 420, that's a solid result. And I think the market would treat that well.
All right. So, it's weird when you see all four of us again, but you hit it dead on. Well, who wants to comment about the product and production delivery numbers? What did you guys think?
Go ahead, Jeff.
I thought they were relatively in line. I know there were a range of predictions. But I mean, the example I like to give is, on a base of 440 builds and 423 delivered round up, what's 9,000 units more? I don't know if that makes a difference in the trajectory of the company or not. So I kind of look at it like, as long as it was, like Christian says, like as long as it was over 420, to me, it seems to be in line and growing. So that was my take. And I always kind of like put this litmus test again, like, okay, if it was 20,000 units lighter, okay, that would have not been a good thing. If it was 9 or 10,000 units more, was it like off to the races? I don't know. It just doesn't seem like it's material to me. What is material is just the consecutive quarter on quarter growth, which is very difficult to do Q4 to Q1.
Yeah, I agree with that. I was more bullish. I was 437 and a half. About 7,500 of those were probably the transit Model S and X, because they were shipped relatively late from Fremont to the other countries, including China. So I didn't account for those. So without those would have been about 8,000, 7,000 too much. I mean, that's less than 2%. I mean, I'm forgiving myself, obviously. Christian makes sure I remember I was wrong. And he was right, of course.
Gotcha again. First it was Herbert, now I'm going after Alexandra. Just kidding.
There he goes again. There we go. But I mean, I honestly, I wasn't, disappointed because it wasn't below 420. I wasn't overjoyous either. The market corrected from exactly what it had anticipated, meaning Thursday, Friday, we had this move up to 207. Now we're back in the same zones. So just a non-event. The one thing to look forward is now the earnings on April 19th. I actually thought they would only come on the 26th. So it's a week earlier, very early. Will be one of the first ones. Reporting, and we'll take it from there.
Since I have you here, can you answer this question? Yeah, Renee's asking. Just heard Cathie Wood sold 57,000 shares of Tesla.
Yeah,
you would know
they
why.
Did this morning. Sure, I would. So this is in RK. In RK, they had a redemption. So this was just correcting, proportionally all shares to the outflows they have. So this was not a positioning. This was just a reaction. Yesterday they had a huge inflow and they bought 87,000 in the same fund, and today they redeemed these. Or another client for sure. I don't think any client goes into RK for a day, but this is just normal portfolio management, not at all a position taking or a sale that they would be convinced of. The fun fact actually brings me to a good point. So with the price dropping, they're in RK now below 10%, so they could add some, and we would know that by 5 o'clock tonight.
Yeah, and I'll just say back to the P&D, because that was our big thing, Herbert. And I guess this will go to Jeff, you, or Alexandra. I'm not an expert in this, but I'm a rational guy, and I try to use some logic. So this is the only thing that's a little concerning to me about Tesla right now. And it's not that they're not doing well. It's more of a macro affecting Tesla. A great company sometimes could have some hardships in a tough macro environment where consumers are pinched. So over the last 4 quarters, if you take production and you take deliveries, I think it's about 78,000 were produced that weren't delivered. That means we have cars out there roughly about to the tune of 78,000. Then if you take Q1, if assuming you didn't sell all those cars, maybe it's closer to 90,000, which is fine. 16 days of inventory. Does it get to a point, I guess, Jeff, since you're more the expert, if this trend continues, and we keep seeing these, 17 or 20,000 more produced than delivered, at that point, is there some type of worrying that some of these cars are not clearing at a certain price and they're building up, or that is not something to worry about? I'm just genuinely curious.
Yeah, no, it's a great question, Christian. There's just been a lot of commentary on Twitter. So a couple of things about, again, the P&D in the quarter.
You did. You were in good shape yesterday. You told them all. I loved it.
A couple of comments. I just, in the P&D in the quarter, one is, so I've been in a supply chain delivering high volume product, consumer discretionary product to customers. Every quarter we're trying to hit a cutoff date for production. We're trying to hit a cutoff date for shipments. Did that ship leave on time? Did that plane leave on time? Did that plane connect with that plane? Oh no, we just lost 4,000 units. So when I see like 422, 423 versus 4, there's 3 numbers out there. By the way, that's a disaster to me. Like, why are there 3 consensus? Like, someone needs to get this process under control. So there's, the definition of a consensus view is supposed to be like, everybody puts their numbers into a pile, and then you take an average. Well, here we've got 3 different piles being created, and to me, like, that needs to be gotten under control. But just getting back to your question, so yeah, I'm not the stuff I see on Twitter makes a little sense to me from just running manufacturing runs. So let's go to the days of inventory. So first off, there are great people on Twitter. They have great intentions. They're trying to do the right thing. They're trying to point out things. I'm not accustomed to putting up charts and metrics without understanding the goal. And I think this gets to your question, Christian, of like, what's good? And the answer is it's hard to say, because we're not on the inside of Tesla. We don't know what they're doing. Many things impact inventory. First off, this isn't a bad number. It's actually probably industry leading, but this DOI measurement. I personally wouldn't do DOI annualized over a year. What I would use DOI for is I would use it for quarterly performance to see like how is my supply chain working, and then I would look at something called inventory aging to understand, like, this 78,000 cars, that you refer, like, do I have a problem do I have a car that I built 9 months ago that's still sitting in inventory? And the answer we're going to find is going to be no. What we're going to find is we're unlike a GM or unlike a Ford. Put the EV business aside. You see they're not doing real numbers in the EV business. Let's just look at their legacy ICE business. They have stagnant demand. They have stagnant factory capacity, pretty much for the most part. And so so what happens in that situation is you're not expanding production, you're not expanding delivery nodes, meaning you're not going to Thailand, you're not going, because they're, in most cases they're already there for a GM or Ford, by the way. So this is somewhat a little bit unique to Tesla, but it's also unique to the EV movement. So point number one is we're in an expansionary environment, meaning Tesla is going to continue to expand the width of their production pipe. Just visualize, a production pipe and then the delivery pipe. They're expanding both of those things, those nodes. And as they expand those nodes, they're going to have to hold inventory as they expand. It's just going to be, it's a physics thing. So that's why there's a division in DOI where you're dividing by the number of production days. So I don't know where the 75 comes from. I don't think it makes a lot of sense. Like, what happens to the other 15 days in the quarter makes no sense to me. I don't understand why you would do that. Again, if I were looking at this and I was trying to understand the health of the business, first off, it is very difficult to do from the outside. But what you could do is, if you see gross things happening, so if you see Tesla stagnating on 2 million units for the entire year, not increasing capacity, not going to new countries, not adding new models, and you see that DOI creeping up, well, then there's a problem. But as long as Tesla is expanding volume production, expanding delivery nodes, which they are every quarter, and not everyone's announced, by the way, and as long as they're doing that, all of those nodes are going to hold inventory. And then that production pipe, that number of thousands of units per day, there are days that there are units produced that go beyond what's called a production cutoff. And when they're in that window, it could be 1 day of production, it could be 2 or 3. Well, when that 1 day of production was 4,000 units, and let's say you had three days of units that that were produced after the cutoff, that would have been 12,000 before. Now it may be 18, and then going to 20,000 units. So the width of that production pipe. So one, the daily production capacity and the velocity of production will impact this. By the way, as the factory gets faster too, then the number of units come offline, that will impact this as well. It's the number two, delivery nodes. And then number three, we don't know what Tesla is doing with their delivery service levels. We don't know if they're trying to extend wait times, if they're trying to deplete wait times. It looks like they're trying to make wait times as small as possible. And when you try to make wait times as small as possible, you don't play the quarter end game of basically slicing, stopping your factories, slowing your factories, clear the lines. Why you clear the lines? You're clearing money off the line. You want them out the door and you want them shipped for revenue. And then you don't want to create new stagnant or standing inventory. And they also would shut off the doors, for new material coming into the factory. Tesla's not in that mode. Tesla's in this, I have to produce more units the next quarter than I did the prior quarter. So they're getting every bit of material in and they're trying to push every unit out. And what will be the victim of that will be a DOI metric. But what I would look at is I would look at the aging of material, and that will answer the question of how old are these cars. I think you're going to find that they're very, very newly built vehicles.
I appreciate that answer, Jeff. And I just want to answer one more question, and then Alexandra, if you want to answer it, or Jeff. I think it's important, though, because we don't want to be blind bulls, right? We are bullish long term, but we also want to be understanding what's happening, because it's not about Tesla, it's about the environment and how Tesla is doing in it, right? And they're held to a high standard. So I think it's important that we kind of go through this and not just say, oh, everything's going to be okay, like we did before when there was a little bit last year of a China demand and we had to reduce prices. So, and again, I know me and Alexandra talked about this a little bit. She talked about Chinese New Year's, but this would be a fact, right? We're ramping Berlin and we're ramping Austin, meaning we're doing more units, thousands more, right? But we only produced 1,000 more cars in Q1 than in Q4. So then the statement would have to be factual that either Shanghai and Fremont basically were flat to negative if those other ones are ramping production. So that means Shanghai and Fremont would have been pretty much stagnant quarter over quarter in producing cars. Do I have that wrong, or do I have that sort of right?
Yeah, the way to think of it is how many production days are there in a quarter? First off, when you go from Q4, well, first off, physical days. How many physical days are in the quarter? When you go from Q4 to Q1, you actually lose a couple of days, and then you have to look at each production calendar of each factory. And I think what you'll find, to answer your question directly, is there was downtime in each factory in each case that made it, well, why were less cars produced? Well, you have to look at like what was the daily production volume or output per day in day 1 of the quarter, and what was the daily production output in day 90 of the quarter, or you use the cutoff day 75, depending. And what you'll find is that's why we're seeing these things, Austin to 4K, Berlin to 5K. We're seeing, because they're actually increasing that daily production. So I believe it's going to come down to just lost days of production in the calendar. We don't know. We don't know every single day. We know there were some days from 8. We know Chinese New Year was 7 or 8 days. We know of certain instances of why certain portions or why the factory was down, but it's going to come down to the number of available production days in a quarter.
Yeah. I appreciate the answer, Jeff. I think it's important just to kind of frame that so people understand kind of like what's happening. Yeah, go ahead, Herbert or Alexander.
Yeah, let me add. I mean, all about supply chain, there I have nothing to add because Jeff knows his business and I don't. But on the consensus, I can probably add something. So there are 3 ways of calculating this consensus, and all 3 are ridiculous, but there we are. The first one is taking the Bloomberg consensus, because obviously most market participants have the Bloomberg terminal in front of their eyes. There are between 25 and 40 analysts feeding in certain data, not always delivery data. Some are only concentrating on earnings per share. Some are very precise. Some have models. We looked at one yesterday together, remember, where they don't even have the CyberTruck in them and they don't have any other new model in it, yet they do projections to 2030. So that's the Bloomberg approach. And that number was 421, if I remember right. Then there is a company called FactSet. They had this year, this term, only 10 analysts participating, and there were huge gaps between the lowest and the highest, but the mean was 431 or 432. So that's the one CNBC used in their initial reaction, which I don't know whether they're consistently using FactSet, but I mean, obviously, if you wanted to show that these numbers were not a beat, you would use this 10 analyst FactSet tool, and Gordon Johnson is one of those, and he was at 425. So that's FactSet. And then the third one, and Tesla put this in place, and Martin Vieira publishes this always 3 days prior to each quarter end, by sending out an email to any analyst that's on that mailing list, is one that's done by Tesla itself. And that was this year, this quarter at 421.5. It was based, if I recall it right, 28 analysts. I can actually look it up. So it was Baird, Barclays, Bernstein, Bank of America, Canaccord, Citibank, Cohen, Daiwa, Deutsche Bank, Evercore, Goldman, Guggenheim, Jefferies, JP Morgan, Mitsuo, Morgan Stanley, New Street Research, so that's Pierre Ferragu, Oppenheimer, Piper Sandler, RBC, Truist, Tudor, UBS, Wedbush, and Wall. So those are also the ones that were clearly, invited to Investor Day and all that. So I have the feeling that's the best one, and that one came out at 421,519, so very close to results. But obviously the press doesn't use this one. So Tesla is doing what they can by publishing this one. I'm not a big fan of them publishing this, but it may help. It may help not spreading FUD. But then you see what happens. Thank you very much, Herbert. Then the press takes the one they cherry pick, and then that's that. Because
it happens every time, Alexandra. I think Martin last time had to it was confusion and he had to tweet something out. This time there's confusion. I think I saw a good idea by Troy Tesla. Why don't Tesla tweet out the expectation and say this is what most people are going by? Because some analysts don't update their numbers over the quarter, and then you got weird numbers there. they should put out a number so everyone knows what we're dealing with, because we're going to run into this every quarter. Every quarter we're going to run into this unless they fix it and make a standard. Yeah.
I agree with you. I think the idea of just emailing it to those that are on the Happy Few mailing list is actually boycotting it itself, right? It just put it out on Twitter when you have it, and then that's that. And if they don't beat it, they don't beat it. But at least then that's the standard.
Yeah.
And I think that should be. You're completely right. So on all other points, Jeff, you know much better than me.
Yeah. So thanks for going through that. I think that's helpful. Because I was confused as well. I would be really upset actually if I were running, supply chain for Tesla, or if I was accountable for that number, if I were Tom Zhu and I didn't know what success looked like. I think success to them is just continuing to scale production. I think for them, it's all about production, and then whatever these quarterly cutoffs are, they are. I don't think they're trying to game a number at all. But just to kind of recap what's on Twitter, I see the DOI numbers. I think posting them without context and posting them without a goal isn't as helpful as it could be. And maybe this needs to turn into an analyst question in the next earnings release. It's just as like Tesla, if we're going to talk about gross margins, or we're talking about operating margins, and like, okay, are you targeting a particular DOI? Because then we can sit back and then we can break down, okay, what are they doing with wait times? What are they doing with inventory? What are they doing with production over deliveries? And then we can speculate if they actually put out a target. But we don't know. Tesla may be trying to grow that number for a number of different reasons. Again, holding inventory isn't a good thing for cash, so that's not an objective. But if there could be a higher order bit here in terms of like expanding production, expanding to new delivery nodes. We don't know where do these S's and X's go that were built and not delivered. I think they're going to answer that question as well in the earnings call. And I think if we're going to talk about this and like, oh, the number went from 16 to 13 or 13 to 17, I think we should have a goal, and I think we should understand like what success looks like.
Okay, I just want to change the conversation a little bit. I have a different perspective than all of you. Just sorry. Everything you've said so far is fantastic information. I'm learning a lot. We are learning a lot. We need to understand this. But if I step back and look at the whole thing, nobody was actually concerned about the inventory, the days of inventory. There was a bunch of retail investors like us that was trying to point out that small little number. At the end of the day, when you look at the investment analysts and what they were saying, they all kind of got it. Nobody was blaming, oh my God, the sky's going to fall, Tesla's going to fail because the gap is too big. Okay, number one. Two, I didn't really feel and sense that there was a big reaction to the production numbers or even the delivery numbers. Again, when you step back and take a look, and we've got all the tables and charts to show you, it's amazing quarter. We hit it out of the park. It's record quarter. We've seen this, hitting 440 in production and hitting for deliveries is amazing. Okay, I'm very, very happy with what we did there. 420, is it? Yeah.
422.
422. Yeah, you know that number.
I know that one.
But you know what I'm saying? Like, so you step back and everything's fine. It's just us, bulls talking to each other and looking things out there. That's how I see things. And I think the reason why the stock fell, and again, many of us should not be caring about the weekly ups and downs. It shot up on Friday. And the reason it did that was because of the, just the economy, right? People were so bullish about it. And then of course, then came the news of the oil and so forth. And all the stocks fell on Monday, including Tesla. But of course, Tesla was outside. They kind of lost what they gained on Friday. So could you blame, the fall because there's this, this is going to carry over to the next month? I don't think so. I think in general, Tesla's viewed as amazing what they accomplished during a tough macro. This is a tough macro. They grew. I made this comment to you guys, right? I saw the way I look at it was production grew 44% year over year. And deliveries grew 36% year over year. Yeah. This is during a macro year, a tough macro year.
Yeah.
And so I know that, Jeff, you pointed out that typically Q1 is actually a soft year, and you got to look at days of inventory. You got to look at, you got to look at the EV sales and that growth as well. But end of the day, I was thinking, well, that's a good measure of macro, because if they did not have the macro, you would probably get the 50%. Not that they're promising that every year will be 50%, but the reason why it's 44% and only 33% is because of that. But regardless, tell me another company that grew 33% last year. And the whole reason about the inventory thing, the days of inventory, if you compare it to all the other car manufacturers, Tesla's still number one. It's still the best.
Yeah.
There's no one that's even nearby.
You're 100% right, Herbert. Let me just put my investor hat on, like dumb investor hat, how we look at it. So the stock market in the short term is an expectations game, right? You had retail, and this ain't bad, but Tesla bulls got really excited. They're saying we're going to do over 430, 440. I saw bulls saying 450. We had all these things, and then when you see a 422, everybody's deflated. They're like 422. Like I still think it's a good number, but it's an expectations game, right? And you had certain estimates on the street that were higher. So everything you said is 100% right, but you can explain the stock move short term due to that, because it wasn't quite what everybody thought was looking like a good quarter in a tough macro, because the expectations got raised up a little bit along with the quarter, right? So the Troy Teslikes of the world was a little higher, even though he wasn't much off. It just seems like as the quarter was going, we were grinding higher, and it seems like we kind of just had a good quarter, okay to good quarter, not a really good or great quarter. So it's just an expectation game. And then the only thing I'll say is, where is the margins, right? It's like the little investor hats one again. This doesn't make sense other than people like me and that do this day in and day out. Like, what is the earnings going to be, right? It's sell first, ask questions later, right? If you would have saw a great number like 440, 445, wow. Like, I'm not worried about margins right now because we just got a monster delivery. They're going to make it up on volume. But it was so-so, and production was a little higher. So I think some people look at that and say, rightly or wrongly, I'm just trying to explain investor psychology because I don't think everyone gets it. I know Farzad's been talking about this. People see that units of production are outstripping what they're delivering quarter after quarter after quarter, 34, 22, 17. And they're thinking, okay, they're producing them, but maybe they can't clear them. And Jeff explained that. I'm just saying what dumb old investors think about, and then they react when they go to their computer and sell and buy stocks. So I'm just giving you the rationale, not it's right or wrong. I'm giving you the reasoning. Okay, I'm done.
Just a quick comment, if you can hear me. Herbert, there were prominent tweeters of Tesla financial news tweeting inventory charts left and right. So I wouldn't say nobody was talking about it. I do agree with you that the analysts that cover the name weren't talking, because it's not a problem. I don't believe it's a problem. Again, to me, this would be a problem if Tesla was stagnant in expansion, both in production and delivery, and then DOI was going up, then that would be a problem. Again, we have to get in the inside of the company to know what is inventory aging, what are inventory turns, and then you'd really understand, like, does Tesla have a problem or not? My belief is because we know they're expanding, that I don't believe that there's an issue. The other thing is I can't explain 1 or 2 day moves. I don't think anybody can explain 1 or 2 day moves in the market. But Christian's right; it is an expectations game. There's Tesla and BYD are trading, I think, in the 50x multiples. So they've got to, all their earnings, they've got to hit it out. And just the thing I don't understand is it depends. Again, this is the confusing consensus role of like, which consensus is it? But that's why I put my rational hat on, and knowing from like living the 90 days of like running a production operation, that like 9,000 units more, like, okay, I just built them. They're already leaving the door. This isn't a big deal. Like, as long as like we're going up in that 50% CAGR mode, I think it's fine. And I think, again, in front of CyberTruck, if you're going to lose your mind and think that Tesla, who's got a 4 or 5 year waiting list for a new product where they can control all the pricing, if you're concerned that they've got a kind of a demand issue brewing, I think you're barking up the wrong tree. Now, what I love this $25,000 car to be sooner. Absolutely, I think all of us would, and that'll lead us maybe to some other discussion later on. But I wouldn't. I'm not. I think Tesla's on a great path, and I'm just trying to explain kind of how the inventory topic was being perceived.
Let's can we talk about expectations for margins then? And I know we got to be careful because we don't want to do it yet again, get everybody all excited and all that. But I'm curious what people are thinking at this point. Why don't you start, Alexandra?
So the question is, which margin are we talking about? Is it automobile margin or is it operating margin? The advantage of the operating margin is that obviously energy and everything else in the business will help that. Operating margin has been, I think now, about 17% lately. And I do believe if they can keep that up at those levels, that is going to be a really good level. Automotive margins, I believe, will come down to somewhere between 20 and 22%. With my bullish delivery number, I was a little bit higher, but prudent. Didn't want to talk about it last week yet. But the main thing we should look at is operating margin on the 19th. And like I said, if they keep that around 17, maybe even a little bit better, that would be perfect. And the help will be from the mega packs and from cost cutting. That's where we will see. That's where we'll see whether that triggers through now.
Yeah, I'll just say I forgot exactly what the operating margins they did last. I thought 15% was their operating because their gross was 25, 26. So if we're going lower on the cars to that 22, then I think operating margin is going to have to go down a little lower too. Just because if you're going to take down the auto that much, and that's where all basically the revenue is, I don't know that we're going to be able to keep operating margin up near 17, 18. I think that's going to have to be a great result to me would be in the 14, 15%, to be honest. That's the way I'm looking at it, because I think if the gross margins are like 23, 22 on the auto, then I think that the operating margins will probably be 14 to 15. That's just the way I'm thinking about it. I can be completely wrong. But from what they've done in the past at higher margins, I've seen operating margins around 14, 15, 16. So if the auto's coming down, I can't take operating up. That just doesn't make logic to me. So I don't know. We'll see.
Yeah, I believe when Tesla made that statement on the earnings call, they had their order book for the next 6 weeks or so in front of them. They knew the exact mix of what they were building roughly. And they've got a really good feel for their costs. Not feel, they know their costs. And they know the schedule of when they're rolling in their cost reductions, both engineering and supply chain driven. So I believe on third week of January, they knew a lot more. And if you look at their historical EPS projection to what they actualize in a quarter, they've been beating in the last several quarters. So I believe they've got a very good handle on their costs. I don't know what the number is going to be, to be honest with you, because there's so many there could be so many things that could happen, but I do believe it's going to be in the lower end of that. This will be like the lowest quarter of their guidance, and I believe they'll progressively improve it each quarter. And again, as they fill up, those Austin and Berlin factories are only about half full in terms of their first phase and their first stated production output. So as they fill up those factories and utilize more of that overhead, their cost structure is only going to go down. As their volumes increase, their cost structure is only going to go down. And then the other thing that they've done, and we know that they're doing, is the delivery wave. They've been flattening that delivery wave. So they're not going to be using expedited logistics as much as they were before. And they weren't, so and those are excessive in additional costs. And when you're not building as that many units in the final month, you're not expediting that many components inbound into your factory as well. So people always think about the delivery wave and being a logistics thing. It's also an inbound material thing. And once you can level load and smooth all that out, your costs come down. So I think those are the 4 or 5 areas they're focused on. I think this will be the lowest quarter, and it'll go up from here.
I have a question to you, because you know supply chain so well. Do you have any explanations why Austin is ramping now at 4,000 cars a week, and Berlin is already at 5,000, because for a long time they just seem to be at the same level. Is it because Austin is also building up the CyberTruck line, or is it? Do you have any other ideas?
Yeah, I mean, it could be that. It could be an allocation of 2170 versus 4680 that they're trying to do. Maybe they're trying to do more 4680, and it may be slowing them down a bit. I mean, so there could be a number of different things. I think when all of these elements get to their peak capacity, it'll be less of an issue. But I don't know if I can. Being on the outside, it'd be hard for me to point to one thing at this point. But the focus on the CyberTruck and the line readiness there, that could be a factor. They could also be. We're now in the second quarter of the year. If I were them, I would be ramping CyberTruck battery packs at this point. In fact, all the electrical supply base, if CyberTruck's really going to start in the third quarter of this year, the electrical supply base that comes inbound to Tesla is already in mass production. And I would assume that they are starting to not only they've been reserving cells for Cybertruck, but they should be actually starting to assemble packs pretty soon, I would believe.
And
so
we had
2
indications for that. Yeah, and we had 2 indications, actually a couple of indications for that. We saw Cybertrucks in the wild. We had Elon telling us that he walked the line in Austin and that it's very promising. And we had that April Fool's Day video with the Cybertruck not crashing, right? So all these sort of start heating us up, right?
Yeah, and back to inventory, they're going to start bringing in a lot of inventory for Cybertruck that isn't going to ship. So you're going to see that inventory, like if they don't ship, let's say they don't ship until October. And this is, by the way, this is a common problem for a lot of consumer discretionary electronics makers who do these fall launches. They're going to be bringing just a message, just a warning to people in Q2, and I believe definitely in Q3, Tesla's going to be bringing in a lot of inventory that won't ship until Elon's team approves that truck to ship. That's all inbound inventory. That's going to be all finished goods, and that's going to be building up in the factory. The other thing that Tesla's going to start building up a lot of inventory is on the energy side. Now that they're really pushing Powerwalls and as well as mega packs, that the energy side, we don't know. By the way, when we see their inventory statements, I don't think it's broken out yet in terms of what's auto inventory and what's energy. But someone could correct me if I'm wrong on that. But you're going to see inventory building up for energy as well.
I think at the moment we have the days of inventory only related to cars, but I may be wrong. I have to check it.
No, I think they do have after the quarterly, a few days after that report that comes out. I think it does break out auto from. I think the last time it did, yeah, but I could be wrong too. But yeah, I think it does.
Yeah, it's just message. You're going to see a lot of inventory. Tesla's on the precipice of. I see the Y going up this S curve, and just in terms of production output. I see the Cybertruck ramping. I see energy ramping, and you're going to see Tesla bringing in a lot of inventory.
Yeah, and I interviewed Randy Kirk, and what he was saying was that what we might be surprised with in the first 3 quarters of this year is a higher percentage of Model Ys than we expected, and the Model Ys has higher margin, lower cost, and that could contribute a little bit to the margins.
Yeah, but I'll push back on that, Herbert, because we only did 10,000 in S and X, and that is a margin machine.
It's
so yeah, more Ys.
Yeah,
I know, but going forward, is S and X just going to rebound? That was even though it's a smaller piece, that contributes to the higher margins, right? When you got 25,000 of those sold in a quarter rather than 10, that's an incremental hit to your margins. Even though Ys, it's not a long-term thing, but if you're just going to talk about a quarter to quarter, it could be, it could be a percentage point or two. Yeah.
All right.
Yeah.
Well, let's. Oh, go ahead.
Just one. Yeah. If we were to be critical, so that the S and X thing is interesting. I believe they're going to new countries and there's new delivery nodes for launch that just haven't launched yet. But one thing you could be concerned about is the gap now between S and X versus a 3 and Y, where the 3 and Y brought down so much. Were they too close together before where people were like, okay, there's not that much of a, I'm just going to get the S, or I'm just going to get the X. So I don't know if that gap has widened enough to the point where it kind of strands them a bit, and they've got to come down a little bit further. So I mean, that'd be one thing to be critical and kind of keep our eyes on. But I believe the 2018 or 20K built and the 10 or K so shipped is a launch, a pending launch that's going to happen, I believe.
All right, guys. So we've talked a lot of numbers. We talked margins. We talked P&D numbers. But the last few days, you guys have all been pretty emotional. Each of you have had gotten triggered.
I'm a stoic.
Sure, you are.
Me too.
Yeah, sure. It's hilarious. Each of you have your trigger words, and Alexandra was keeping a list of what trigger words causes each of you. All went kind of like somebody pushed your buttons and you went after them. So first of all, there was a Raymond comment here. Love Alexandra's calling out Ross for complaining about Tesla missing his production.
Well, that was my trigger word.
Ross.
It was. I mean, my gosh, yesterday it was just ridiculous. I couldn't stop myself. Sometimes I tell myself, "Come on, you're a 56-year-old lady. You should just, be ladylike. Don't go after him. Don't bite. Don't become a street fighter." But when I have his stuff, I can't do it.
Yeah.
He was complaining that Rivian sold the number of cars that were missing in the S and X deliveries. I mean, this is completely balloony. There's nothing to be. You don't even know what to answer. So I mean, I'm then going straight after his fund because he sold Rivian in his fund. So I just said, so why did you sell it, right? And obviously never got an answer to that. But the same. There was going on. There were 5-6 tweets that he initiated, right? Nobody initiated any fight with him. It was him initiating it. And after the fourth up, I just said, if you're just spitting on Tesla all day long, how can you still have it number one position in your fund? Because that's the thing. I really don't understand. If you're so unhappy with a company, if you don't see any improvement in the stock price, if you think the multiplier is already too high, why in the world do you want to keep that stock with your fund manager, right? It's not about.
I asked him that direct question. Remember, Alexandra? I said it. I also responded to him 500,000. I said, I told you were too optimistic. And he came back and he said, he had one tweet saying Tesla needs to focus on selling cars.
Oh, yes.
That one was where they just can't
I know.
Not to pick on Ross, but yeah, some of that stuff yesterday was a little bit out there. Yeah.
It was. And I'm like, so the 422, they were handed over, not sold, right? I mean, where are we? This is just absolutely crazy. And then praising companies that did 5,000, 10,000. Fair enough. I'm happy about any EV maker, making numbers, no doubt about it. But just so unfair. And that was that, right?
Yeah.
So he's a classic example, right? I mean, he claimed 500,000 cars.
Yeah,
he was on our CyberBulls show. You were going after him.
We told him that was crazy. Yeah.
That's ridiculous. But why would somebody say 500,000 and then just hammer them when they hit, like what's going on? What's going on?
I don't know.
I don't want to say.
Okay. And then other than
I like
Ross,
Ross.
what are the...
I just don't know what he's thinking.
Me too.
Yeah.
And that's what I said yesterday evening when somebody asked me, Ross is like a brother. I don't mind at all meeting him again, drinking a beer together, hugging him. That's no problem at all. Because I think he's fundamentally actually a really nice guy. But sometimes he's out there and I can't stop myself putting him into the corner because it's just crazy stuff.
And you can be a bull and be critical. There's nothing wrong with that at all.
Yeah.
There's absolutely nothing wrong with that. And you could, you can be like, oh, well, it wasn't as good as I thought. But, when you start to point out direction of I think inventory is a problem. Well, I think you should have well, what's the objective and what's the goal and what are all the variables involved? I think you should have a kind of a thoughtful commentary on it. And same thing if you're talking about advertising. I think they need to advertise. Okay, well, how much advertising spend per car and what uplift do you think we're going to get? How and why and what are the best places to advertise? Basically have some semblance of a plan versus just if you're managing people's money, if you're managing kind of expectations, if you're kind of trying to analyze a name and you're managing a portfolio, I would think you would want to think in those terms or those goals around, okay, I think inventory
exactly.
What should the goal be? I think advertising is the problem. Well, this is what I think we should do. And this
Yeah.
is the kind of uplift I think we're going to get. Oh, by the way,
And-
if you're talking about that, you can't just talk about the good side of it. You also have to think, if I'm going to put that money in advertising, well, what am I taking out of that unit economic stack of the car to fund it?
Exactly. And his good plan was to do an ad during the Super Bowl, right? Guess who did an ad during the Super Bowl? Hummer. Guess how many Hummers were sold last quarter? 2. I mean, I know they had 10 other problems, no doubt about it. There was production problems and all the rest. But the ad, did it help anything? It helped nothing, absolutely nothing. And then the one thing I tried to explain to him, these 10,000 S and X, they are on ships being shipped to Europe, being shipped to Turkey
China.
now, being shipped to China. And what would have advertising changed, right? What would the ad? No answer to that one.
Yeah, I agree. And we can move on. I'll just say real quick, we are in a tough macro. I don't know if you want to touch some of that stuff, Herbert, because I think that's important. But I think Tesla's doing a great job for what they can do. And I think sometimes expectations of what they've been doing, and even though they're doing great now, some people, like, you can pick anything, right? You could see the good in something or the bad, right? You could twist any narrative you want in the short term. You could say, hey, they cut prices significantly, so they should be able to move more product on a percent level, right? You can make that argument. You could say, wait a minute, we're in a tough macro. People are stretched, but they're still buying these expensive cars, and they're growing year over year at 36%. So wherever your purview, whether you're long or short, you can make up any narrative to fit your position, right? That's how you have to think about these things. So, yeah.
I love it. Okay. As we said, macro is so critical. So there's a couple of points here. You can explain what this is all about and what does it mean for Tesla? What does it mean for the economy going forward?
Yes, I can take it real fast, and then Jeff and Alexandra. So JOLTS is basically job openings. So this is actually showing the economy starting to slow, right? Jobs are so good. Like the job openings are coming down, meaning businesses, not only now they're looking for less workers, there's a less available positions. And we're also seeing more layoffs, right? We saw McDonald's lay off. So here's what I was talking about, I think, last week, and we've been talking about it for months, this macro discussion and the raising of rates having effect on the economy, right? It doesn't happen all at once, right? It doesn't matter until it matters. And when people see a jobs print that's weak, maybe it's 100,000 or maybe it's negative, it's going to wake up everybody and say, whoa, where did that come from? Maybe the economy really is slowing now and it's starting to get worse. That's why I said, look at the Atlanta Fed. It was at 3 something. Now they went down to 1 something, like in a dime. Do you see how the GDP is now starting to roll over? Like, it doesn't take much after all this tightening for it to flow through. And we don't know how much more there is to go. So this is why I was saying it's a very tough environment for equities here, because if we do still get good numbers, that gives the green light to keep hiking. And if the Fed does cut, which everybody wants this pivot, they're only going to pivot if there's an economic crisis. There is no way the Fed is going to pivot, I believe, and cut rates if the economy is still growing and if we're making jobs. I just don't see that. And if they do, that means there's an economic crisis, and that would be bad. And it's not like they're going to do what they did after COVID. There is no Fed put because of the inflation problem. Now, you could say inflation's coming down, but it's still hanging tough at this 5% area. And the Fed is not going to cut rates. A pause is one thing. Cutting rates into even a so-so economy and a job growth, even 150K, I don't think they're going to do it. So this is still going to be a very tricky environment. Jeff had a great tweet, stagflation. I'm not calling for that, but that's basically a GDP that's kind of so-so, and unemployment starting to rise, right? And we have this lingering inflation. So that's a bad scenario. We had that in the 70s, and that was not a good thing for stocks or the economy in general. So this is tricky. So yeah.
The market's reaction to JOLTS was interesting. It went up, and then while it was going up, and then it went up very briefly, and then it came right back down. But then all the metals started spiking, gold, and silver, and so forth.
Yeah. And
I find it interesting. Here's the number. First off, there's numbers behind these numbers. Last month, first off, JOLTS of all the rear view metrics that the Fed uses, this one is literally months. This is we're looking at 2-month-old data now that we're in April. Some people believe the metric is not even real. It's like it's hard to point to, like where's the database that has all this information. But let's say the number is real. They took the last month's number, which was higher, to the January number, which was higher than expected, and they readjusted it down 300,000 jobs, which would have made it lower than expected. And then, but if you take all this in context, there's still 10 million jobs that are open in the economy. And before COVID, this JOLTS number was 6 to 7 million. So we have 50% more job openings or more than we did before COVID. But this was up at 12 million at its peak. So if you take all these numbers in context, from a Fed perspective, the number is coming down, and it's coming down at a pretty precipitous rate. Who makes these projections by month? I don't know. I'd love to have that job and see how that's done. But the number's coming down, and it's 50% higher than it was pre-COVID. So there's jobs out there. I don't believe this is an end of the world type number at all, actually. So we'll have to see, like, what you have to start plotting the line and see what trend forms. And traders like to get out in front of that and want to front run that trade. But this is 50% higher than pre-COVID.
Yeah, and I agree. Like these numbers, even the jobs report we're going to get Friday, even though we're closed for Good Friday on the market, I still think we're going to get a labor report. So that should be interesting, but no market action. So curious to see that. But they bought the 10-year, pushing yields down, right? You see the front end going down, and you still the Fed talking about maybe going another quarter point higher. So again, we're in this tricky place because the bond market is telling the Fed, again, the bond market might back up next week. So disregard what I'm saying, but I'm just trying to get people to understand what that yield curve is saying. They're saying there is something about to happen in the next 3 to 6 months that is going to cause the Fed to cut. Something, a crisis, GDP contraction, we're in recession. The bond market is screaming, Fed, recession, economic crisis, something, banking crisis. We still see deposits of the big banks going up. Like, we see a lot of things happening. And again, it just takes one little thing to go, and then you get this ripple, right? And then the lagging data of jobs comes through in the next couple of months, and we see that. And then we find ourselves in a recession, right? And then we see the earnings come down, right? And again, everybody's la-di-da until they see the data smack them up in their face. Like, whoever thinks that we're in a strong economy right now, I don't know what to tell you. We see the layoffs all over. That is adding up incrementally, right? We see it going. Now, it's not catastrophic right now, but a lot of those rate cuts still have to work themselves through. So I'm not trying to scare anyone. I'm not saying everything might be fine and we get a soft landing, but I'm saying the incremental data, the leading indicators, ISM, again, you can put what you want in it. It's contracting. The PMI, the purchaser man, contracting, low levels of manufacturing. That means less stuff people don't want. They're not buying. And we know some incremental data about people saving and credit cards. All this stuff is going to cringe consumer spending, and that's 70% of the economy, the consumer being able to get dollars and spend. So that's why I think we just have to, keep our head about us and not think we're off to the races again because the Fed's going to pause or cut. We're still in a very perilous time for the economy and the market.
Okay.
I'm just being honest with you. It's just what I'm thinking. I could be completely wrong, and everything's
right. Yeah.
Yeah.
But it's like you said at the beginning, right? Which is good news is bad news, and bad news is bad news.
That's
and then you're saying, that there's all these signs of a recession, but then the Fed's not going to cut or pause
because they're stuck because inflation's high.
They're going to have to they're going to do it. They're going to have to.
Let me add.
Go ahead. I just want to.
Let me add 3 things. The first one is I said to you all that last week. I hate it when we think the bond market is going to dictate the Fed. That never works. I mean, I know we have the feeling because it's more daily. We have a sensation of the yield curve. We have the feeling there is a message out there and they should listen, but they don't. And Powell especially doesn't strike me that anybody who would listen. The second thing is I don't think they're done with their crypto pins yet. And the the fact that Elon stepped out and changed Twitter to Dodge is very interesting for me. So yesterday I was thinking, wow, this was probably the moment where I would have never expected that, right? Gave Dodge a nice lift from 7 cents to 10 cents. I don't know where it is today, but I found that very interesting that happened. At the same time, we all know what Elon thinks of Powell, so there may be some tension there. And the third one, I just want to recall everybody: housing affordability is still at a peak. It's still at a peak. The mortgage rates are still high. They're not as high as they were 3 months ago, but they're still very high. But the house prices didn't come down. Still very few foreclosures. So there's still tension in that home market. The Fed would like these home prices to come down at least 10, 20, 25%. That's not happening. And I just don't see the bond market being able to tell the Fed what to do. I'm still sitting there uninspired and very, not happy about the situation.
I agree with you, Alexandra. But to my point, if they don't listen to the bond market, Powell's going to keep going another 25, right? And make it 5 to 525, which is only going to put more stress and higher interest rates, right? And curb more spending. Yeah.
I know, it's crazy. It's crazy what they're doing. I'm very, very unhappy what they're doing, but I don't see them finding any argument to stop at the moment. I just don't see it yet.
I think we have to, if we bring it back to Tesla for a minute, it has to come down to this EV adoption curve, and it has to, first off, are we going to have a macro auto slowdown? It looks like GM sales weren't
that bad.
They weren't bad.
Yeah,
I don't know if we got
and the average price price went up, which I found crazy. I expected them to come down by now.
Yeah, so it doesn't seem like there's a broader auto slowdown that's occurring yet.
That's the problem. Yet. What's it look like 6 months from now?
Right. The operative word is yet. But I think we have to go back to EV adoption. Like, what would slow EV adoption? Is there anything that's happening that would slow? The thing we have to keep an eye on, I think, as investors is there anything geopolitically, or is there anything happening economically that would slow EV adoption? Well, I mean, if there's a conflict between the U.S. and China for whatever reason, that could cause some issues. And by the way, I do believe the geopolitical conflicts that are kind of happening and brewing are also not helping. They're probably destabilizing markets a bit and creating volatility. But back to Tesla, I think it comes back to EV adoption. And people are finding that they're better cars. The range and the performance per dollar spent gets you into a better car if you get into a Tesla versus if you get into a comparable Audi, BMW, so forth. So as long as that continues, and as long as nothing gets in the way of that, I mean, broader auto in the US could slow down 1 million, 2 million, 3 million units, but I believe Tesla can actually still grow to their 2 million unit 1.8 on the low end, 2 million unit objective for this year. I believe that.
Yeah.
Right.
I agree. And before we leave, we should try to give a little roundtable on what we think the deliveries will be by the end of the year. I think that'd be fun to do at the end.
Okay. So let's couple points about Elon. So just a quick thing about what you said, Alexandra. I don't think that the Doge was anything about Powell or anything like that, cryptocurrency. It really is about Twitter, and they applied for payment processing license. They probably got it. And so that's the way that they're introducing, which is very important.
I can research that. I can research where they got the license. I didn't check that yet. I'll do that.
Yeah. Okay. But a couple other rumors and a couple news about Elon is that he's visiting, right? He is visiting China. And there's a couple of rumors that came out today. One is that Tesla is about to start a large-scale test of FSD beta in China. And then the other one was, so I like this comment by Marcel Munch. He says, if it's true, it's indeed big news, not because of FSD itself, but it shows Elon and Tesla's ability to navigate China's legal and regulatory framework and having the right connections. So if this is true, I really like this comment. That's why he's probably meeting with the premier of China. He has got a good relationship. Like you guys said, the only thing that could really derail EV adoption would be some sort of China, US or China Tesla conflict. Then the other bit of news was China's publication Sina Finance said that this is all just rumors, that there's a low-cost model, a small Model Y, and they're going to produce 4 million vehicles per year spread around multiple different factories, Giga Berlin, Giga Shanghai, and also the Monterey factory doing the bulk of it. These are rumors, but again, it's going to be pretty interesting if that comes true, that this is even happening. So
it's not really a rumor. I mean, Tesla said that's what they're going to do. I mean, the rumors from Tesla. They're going to open up Mexico and they're going to do the Gen 3 and they're going to do millions. And they talked about Elon 4 years ago, when he went to China the first time and he did his dance, he said, we got to do a cheap car and we got to do it in China. He's already said that he wants to do that. So we know all this stuff. I mean, this is just kind of in a nice little tweet for us to get excited about. This has been Tesla's plan all along. Now, is it going to happen tomorrow? I mean, I don't think so. This is going to take over the next 2 to 3, 4 years. All this stuff will develop. Maybe it happens quicker, but I think Tesla, it goes back to that question. And look, I'm not being critical. I'm an investor, so I have to be realistic. When Tony Saganaki asked Elon, how are you going to do 20 million? And he talked about the cheaper car. Elon kind of laughed it off and dismissed it and said, FSD, bro. You know, it wasn't on the plate. They backed everything up. Now, maybe they backed it up for a reason. They had to do Model Y. They wanted to scale it. I'm not saying anything bad, but that has slowed down a little bit of the progress to this next generation car. And it looked like maybe Elon made a bet on full self-drive being a little ahead of it than where it is. And that hasn't quite came to fruition. So that could be a little bit of a sticking point there. I'm just bringing it up because that's on the record. So you can do what you want with it.
Yeah, it's fair. And I believe Elon is militant about certain axioms. And one is, in a earnings call, he is not going to make a product announcement. Yeah. So that by that analyst asking that question, even though it's an appropriate question, but the fact that the answer involved something related to the portfolio, I just believe this is a rule. This is an axiom that Elon's militant about. And he's not going to talk about product that hasn't been announced in an earnings call.
Yeah,
I agree with you. I agree with you, Jeff. But and Tony Saganagi knows this very well. He's one of the most experienced ones. So it was going up a slippery slope and knowing what he was doing. But let me get back to the rumor. So you're right, Christian. We always knew there would be a smaller car for China and for Europe. What I found interesting today is that they call it a smaller Y. I imagine a shorter Y, not a smaller Y, because a smaller Y is the 3, right? I had both cars next to each other. They are the smaller version. The 3 much more expensive to build, so it's perfect. They're concentrating on the Y, but I do believe it's going to be a hatchback, shorter Y. What was your impression? Do you have the feeling it's really going to be smaller, lower?
What do you think, Jeff? I mean, I don't know. I would.
I think they want to maintain the kind of the 4-door ability for ride sharing, and kind of what Tesla is known for, which is storage. So I'd be interested to see how they solve for both. So maybe it's a Y that's not capable of being a 7-seater, so they can shorten it up. I don't know. So the question here is this leak from China an intermediate vehicle that's going to ship sooner than the Gen 3 that was discussed?
No, it's supposed to be Gen 3, but I think the way I'd interpret all this is that, remember how there was this rumor about the Model 3, right? A Project Highland, that's what they're going to do. It's going to become a new designed Model 3. I think it's still going to happen, but what they then said was, you know what, instead of stopping the production lines in existing factories, we're going to go build brand new factories built with a Gen 3 platform and so forth. So then when this rumor, it makes me think that, hey, because you already have the production lines for a Model Y and it already has a front and rear casting, is there a way that we can create a smaller version of that? And it makes it much easier to adjust that line and then produce this faster and get it out there. That's why I was thinking, okay, that does make more sense. And the Model Y happens to be the #1 selling. Did you guys see that chart that I've been showing to people?
Yeah.
People can't believe it. They keep telling me it's wrong. like they can't understand. In China, January, February, March, the number one selling vehicle by far in China across all segments. We're talking ICE cars, BEVs, and hybrids. We're talking the premium brands and the $5,000 cars. The number one selling car is Model Y. Model Y. Number two
100%
is the
true.
$5,000 car.
Yeah. If you would have told anyone that 3 years ago, they would have looked at you like you're crazy. They still look at you like you're crazy, and it's even no, you're right. Like Tesla, look, as much as we're talking, we have to go back and forth. Like Tesla is killing it. They came out of nowhere, and they're going to become the biggest auto manufacturer in the world. There's it's amazing what Elon Musk and that team. I can't say it enough. I praise them since we've been doing the show. But when we do this, we have to go through it, and we have to have a little bit of back and forth and take some critical takes and talk about it from a stock perspective. So absolutely, because the show would be kind of boring if we all just sit around here and just say, yeah, they're great. Like Jeff said before, great. Like we have to go in and analyze it and find out and dig deeper, because it's a disservice just to keep saying, yeah, everything's great. Record. Stock markets work differently from just record. So I think it's important for this show to kind of go through and explain to people, maybe regular retail investors that don't follow it like we do, and give them a little bit a different perspective of why certain things happen. So I think that's what I like to do. And I value Jeff and Alexandra, amazing research you guys do, and amazing detail. I love it. And I'm really privileged to do the show with you guys.
Oh.
I really am.
Thank you.
And you, Herbert.
Thank you. Now, I have my sense right now is somebody said this. Wasn't it you, Alexandra? Was it you just said this? They tweeted out recently. Something like, this is really eerily reminding me of 2015 and 2018.
Yeah.
Where what happens
it wasn't me. It was Alex Voigt from Germany, and he's completely right. Yeah.
Maybe you retweeted it, but basically saying that if the way Tesla works, right? Because it's a growth stock, it has all this promise. Then it shows producing and starts hitting its targets. Everybody starts realizing this is a real deal. So then they get, they eventually go boom, it goes up, finally gets caught up. Model 3 factory is really real. They can mass produce this thing, and then shot up 20x, right? Then people are like back to the scenario where they're worried about what's happening. The macro is not helping. They're concerned whether or not FSD is going to happen, all that. And so now it's contracting, right? But then at any moment, even this year, it could then all of a sudden shoot up again, and the story and the narrative changes again, and people are all realizing they are getting it. And that's why the record, it kind of frustrating for us, because we go, well, how come you guys can hear that? But when it builds enough of those, keep adding up, eventually you can't help it, right? Somebody said it's like a rubber, it's like a, what do you call those things? What do you call those
rubber
things?
band.
No,
slingshot.
Not just rubber
slingshot.
band. Slingshot, right?
Well,
and you keep pulling
back. To be honest, you made a great point, Herbert, and Jeff probably lived through it. I was an investor back then. I think it was 14, 15, 16, 17, 18. The stock essentially did nothing, and Tesla was growing unit volume like crazy. Now, they weren't profitable, so you could always kind of hang that and maybe keep it down. But eventually, when 2019 hit and they started to become profitable, you had that explosion. And it could be the same sort of thing. They grow, 2 million units, and they go to 3 million, they go to 4 million, and then it just starts to be this another, triple, whatever. I mean, that's possible. No one knows. And that's why investing is so difficult, because in the short term and the medium term, even 2 to 3 years, you could get frustrated with your stock when you're not getting any performance. So it's why it's a hard game to win. Yeah.
This is the skill, is to be able to put in the money now when there's peak fear. And so when you tell me, Christian, you're going, oh my God, the world's going to fall in the next 6 months. I hold on to my cash, and I'm kind of building up cash, but I don't have the guts to continue to throw money at Tesla, although I really want to. And
you're not. I am. I'm.
Well, that's going against what you just said.
Well,
I thought you were going to say I need to be buying.
I need to be buying, and I've been buying. So first of all, everybody knows I've been buying since 2012.
Right, you already own a lot. Point. Yes, everyone did a different thing. Yeah, I'm
already in. Yeah. And then, but obviously, I've got lots of taxes to pay this year because of my gains, because I moved them from Apple to Tesla. Wrong timing, because it had a bunch of it last year. And so now I've released more cash, and I'm deciding to put it in And first step, right? Rule number 1, protect against a world crashing next year. So I'm going to protect myself first. But I can sense it. I can really sense it. This is a time when everybody's freaking out. The stock is at this level. Go, go, go. Because at some point that slingshot's going to flip and then it's going to go. And I think that it's going to happen. I think it's going to happen sooner than we realize. There's so many things that can just flip it. They're doing an incredible job with the deliveries and production. The auto business is doing wonderful. As soon as we start hearing about FSD or even bot or even energy, that's the more likely thing. I think that it's just going to now cause it to, undeniable at that point.
Yeah, they're about to expand. They're about to go into different revenue segments and margin segments that are very high margin, even higher than auto, that they're not reporting, they're not meaningfully in. So when they ramp up Megapack, they ramp up all the services that go with Megapack, the software and the services that go with that, FSD, and then CyberTruck. Remember, for the first year or two, they're going to be able to control price and configurations on CyberTruck to maximize gross margin. And while they're doing that, they're going to be building the most difficult, highest trim versions of CyberTruck during that time. But meanwhile, they're going to be wringing out the manufacturing line and making it as low as cost possible. So when they bring out the lower, higher volume trims,
I have to interrupt you because every time we talk, you just say CyberTruck, CyberTruck, CyberTruck. And doesn't matter what the recession is. You kept saying CyberTruck is a recession buster. How strongly do you feel this? If everything happens as Christian outlined just 20 minutes ago, okay, and then they release the CyberTrucks in small numbers, 10,000 less this year, are you still thinking CyberTruck is going to be a narrative changer and it's going to be a recession buster? When you say recession buster, you're telling me that Tesla stock, regardless of what happens to the macro, it's going to outperform. It's going to come back up and start rising again. Is that what you're saying?
There won't be a single CyberTruck in inventory for years.
No, but we're talking Tesla stock, impact to Tesla stock. You called it a recession buster. Are you just referring to sales? Nobody's going to stop buying.
Yeah, I'm not. I mean, I can't predict the stock every single day for the next couple of years, but I can predict that a new product that has the pent up order volume that this has will be able to sell through a recessionary cycle, because I've shipped product in new categories during a recessionary cycle, and they sold and they expanded and they doubled year on year.
And what he's saying, Jeff, I guess if that happened, you would think, just as a logical person, that would have a positive effect on the stock, even in a tough time. You'd have to,
any rational analyst would have to value the order book and have to value the fact that Tesla can produce and at volume and fulfill that order book. So you'd have to put a value on that.
Because right now, I don't think they're assigning any value to CyberTruck. I don't think anyone has. I've never seen anyone talk. Maybe
it's arguable, right? They're trading upper or mid to upper 50s trailing, so it's arguable.
Yeah, maybe.
So Gary Black he himself, as an investment analyst, said that he believes that the CyberTruck will change kind of the branding, and it'll get people to come into the website, will buy more of the regular cars, even it'll increase sales.
Let me, this is a great discussion. I'm loving this. So let me just go back to a thing I said before. Again, this is my investor little hat, So when I said Tesla, when I see the commentary, a lot of the retail bulls on Twitter, I love it. And they're right. Here's the problem. Ford and GM have no earnings multiples. They're like dead companies. They're like 5, 6. You can't compare. Tesla's doing this, Ford and GM are doing this. So we have to. Tesla is already valued as the most valuable auto company now. They're a $600 billion behemoth. These other guys that do more unit volume are at $50 billion. The reason Tesla is valued much more is because they're the future electric vehicles, and they're making money hand over fist per unit rather than these guys, right, that are just starting off the gate. So you can't say Tesla should go up. Tesla's in its own universe now. I look at Tesla as an Apple. I look at Tesla as a Microsoft. It's a big boy. It's not competing with the Ford. Yeah, they're competing in that segment, but the market cap is a large mega market cap. So it trades on different things. It doesn't trade on what Ford trades on. It doesn't trade on what GM trades on. It's a different kind of business, and it has different things in the business, like energy and the software and the FSD. So these things have to play out before you get that next leg up. So I just think that's important, because I always see, well, Ford and GM, it doesn't matter what they do. If they struggle for the next few years, it doesn't mean Tesla goes to 10 trillion. Like Tesla has to perform on the earnings, and they have to hit their growth metrics. Even if Ford goes bankrupt, that doesn't mean Tesla goes to 5 trillion overnight. I just want to perspective. That's the way I think about it.
One thing though that would be a factor. First off, I agree with you, Christian. One thing that would be a factor though is their inability to produce an EV at margin, and them electing to not build EVs, and therefore basically handing over that market share to Tesla, which is, I mean, 2 Hummers this quarter and 20,000 total EVs, where 19,000 were the Bolt. I mean, they're handing over, they're handing it over to Tesla. So that does become a factor.
No, that's 100% correct there. Yeah.
They're valued on their earnings growth, and they're valued on their profitability. And let's see. I mean, FSD could literally in itself just completely change Tesla's earnings forever if it meets its full potential. And it's interesting. I talked about this on Twitter. The context in which ChatGPT is talked about is like, this thing's going to explode. It's going to spiderweb. It's going to explode. It's going to be the biggest thing ever. It's the biggest thing in computing. Like, it was literally called the biggest thing in computing ever, potentially. And to think that, Tesla's actually building, real world AI is the basis of their FSD system. How quickly do we think that's going to advance now that they're running more neural nets? I mean, what's going to happen there? It's why would that be subjugated to be running slower or never meeting its full potential? But ChatGPT is just a home run, and it's just going to happen. So it's just interesting to talk about those two things in completely different contexts.
Yeah, and I agree, and that's the typical word again, Herbert, perception, right? At the moment, it's just trendy to be in AI, ChatGPT context, and FSD is not there yet, but FSD will come. I'm a little bit more reserved on how quick the stock will pick up, and I'm actually happy about that, because I can just continue to accumulate. But I do believe it will be better after 2023. I think 2023 is going to be a tough year, and maybe that will bring us to how much our expectations on overall deliveries. And mine is just short of 2 million. So I'm about 1,950,000. So where are you?
So going into that. So I'm a little bit more conservative. Now, I'm not saying they can't beat it, but just the type of macro we're in, I'm going to say 1,850,000. 1.850.
Yeah. Okay. Jeff?
I'm not going to be, this will not be a clip that I'm going to have to cut and replay at that time.
I'm gonna go with 1,925.
Okay.
I'm going to do $1 more than you. I think we're going to be over $2 million. This price is right. 1,925 and $1.
Now, I saw your interview.
One car. Sorry.
Is anyone still thinking this? Like, I saw your interview with Randy. That's 2.2 million delivered. Do you think, Herbert, that is probable? Yeah. Not that it's not. No, but do you think it's probable in this environment in 2023?
Well, I'll pull my Christian hat on.
No, I want to know what you think.
Barring the macro, right? That's what you
we're living in the macro. Comment. You don't have to borrow it. We're in it.
I think in this existing macro, exactly the way it is, if it stays this way, no war, no nothing, they should be able to sell, they should be able to build, and they should be able to sell 2.2 million. It's not going to be the demand issue. And they're going to reduce prices. I fully expect, and I want them to cut more prices.
This is a good discussion. They produced 444,000, right?
And when they reduce the prices, in the next 3 quarters, their margins are going to improve, because in the next 3 quarters, everything's going to be humming. We're going to be getting Austin and Berlin at 10,000 units per car. We're going to have 4680 per week. We're going to have 4680s batteries producing like crazy.
520 next quarter, because otherwise you don't get there. I mean, that's 100,000.
Yeah, you need to start moving to get to that. If you like 444 produced, that means you need to produce in the fives next. You need to be near 550, 600,000 by Q4 to get anywhere near over these 2 million.
They if they cut, I've been saying that if they cut the Model 3 price by even just $5,000 to $10,000, and I think they will need to because it's not selling, right, compared to the Model Y. Once they separate that out and it becomes so, we already know today that the Model 3 is cheaper than a Prius, it's cheaper than a Corolla, and if they just cut that even just a little bit more, then you can see that thing go.
It's a great discussion though, but Herbert, if they do that, the narrative will be, they can't demand, tough macro, they're cutting price, margins are going to get hit more, right. Earnings is going to, I'm just telling you.
Yeah.
Because the second big price cut, look, it's not about fundamentals. I'm trying to get you to understand because you always want the stock price to hit 400 in the next month or two. That won't happen if they cut prices again meaningfully because it's going to go down to the bottom line in the short term. Long term, they're going to just destroy the market, yes, and you're going to be great. In the short term, there might be some pain. I'm just giving you the framework, though.
Can I make one point on the price cuts that people don't discuss widely
Sure.
as they're talking about production? Okay, 90 days and a quarter. Tesla did their price cuts roughly around the third week or so, depending. It was different for different regions, but that's basically 21 days of production that were done under the old pricing, and also 21 days of order book under the old pricing. Correct. And if you go under this adage that there's only 75 days of production in a quarter that you can actually do for the cutoff and meet the number for the quarter in terms of deliveries, that means if you lop off the 15 days at the end of the quarter and then you take out the first 21 days, you're talking about 36 days of production of the 75. So you're only at like 35 to 40 days of production that were done under the new pricing regimen in this quarter. Now, the next quarter is going to have the full end-to-end production will be under the new pricing, and the order book will be under the new pricing as well. That's the point. I see all the hand waving on Twitter from the bears and the bulls.
That's a good point. That's a good point, Jeff.
They cut prices, but then the number it was only this percent higher, but only a certain percentage of the quarter was actually under the new pricing.
Yeah.
The second quarter will be the telltale.
But if they,
you're gonna have to wait, Herbert, to the second quarter. You're gonna have to wait.
But Jeff, to spin it further, so if they cut again, you'll have the same effect in the second quarter, right?
You would until it stabilizes. You would
exactly.
But under the quote unquote the old pricing, that pricing.
Oh, look at Herbert.
Herbert, when your hair's gray, we'll know the answers. Until then, you're out of luck, buddy. I love your face, Herbert, when you're listening to it. I just love it. I love your expression. You're awesome. You're awesome, Herbert. You're
Herbert,
awesome.
Herbert, now you have to tell all our wonderful fans that we won't have a show next week.
That's right. So next week I'm going to New York. Going to be watching some shows with my family and so forth. So yeah, I'll be off Monday, Tuesday, Wednesday next week. We'll be leaving late this week. So no show, no CyberBulls next week, guys. But thank you so much for everybody. Yeah, that was fun. As always. That was fun. Thank you, everybody.
That was awesome.
Any last bit comments here? Are anybody willing to make any predictions, or we should not do that for the
I have last comment.
No, but we're back for the results.
I have last comment. So it was a great discussion. It's a tough time. We're in a tough macro. No one can predict the future. We're just speaking our minds at the moment. It doesn't mean we know anything. It means maybe we know some stuff. Maybe we don't. This is just, for my purposes, educational. I love talking with my friends about Tesla, a topic we love, the economy, macroeconomics, and things of that nature. And I think if we can help some people out there learn something or think about things a little bit differently, whether they're just long-term investors or whether they're maybe trading in the markets a little bit, just understanding how they work, I think we're doing a good job and a good service. So again, everyone, thanks for listening, and it was a great show.
We love all the comments and likes on YouTube too, so keep commenting.
Yeah.
Exactly.
Couple quick comments here. One is you hit it right, so I'll tell you that. And two is I've been seeing that you've been hitting it correctly, even though I am a person who's been saying I don't believe your timing of the market. In the last year and this year, you've been right, but that still doesn't got me. I'm still not on your side there. Still don't believe.
No, everyone has to do what they need to do for themselves.
But you've been doing it.
You've
been doing a good job.
All
right. See you guys. Bye, everybody.
All right. Peace.